Ladies and gentlemen, you have been warned. The second round of banking failures is about to begin, and this is going to absolutely dwarf 2008. We have just got a new bombshell report that shows commercial real estate is absolutely collapsing all the way from LA to London. This is no longer speculation, some crazy conspiracy or doom and gloom. I've got the news, facts, and data to show you it has already started and it is happening right now. Because what I try to do on this channel is warn you of things that are going to come. I don't like to report on things after the fact or do what other YouTubers do, tell you what's happened after the fact. I try to use, my brain, some critical thinking to see what's going to be coming ahead. But unfortunately, the way social media works, if you give a prediction and it doesn't happen the next day, people's attention spans, are so low. If it doesn't happen the next day, they'll say, look, you were wrong. This is just crazy clickbait. But you have to do the same, everyone. Just like a weatherman, he reports that, hey, look, there's going to be a massive hurricane that's going to be coming and it's going to be devastating. You need to either prepare to hunker down now or get out. And all the people that just laugh and say, look, don't worry, my house is very strong. Nothing's going to happen. Everything will be fine. Well, they're the ones that are going to be hit the hardest. And what I see that will be coming over the next 6 months, people, is an economic hurricane. So you're definitely going to need to know what is coming, then how to prepare so you can avoid an economic catastrophe. So everyone, without further ado, let's get straight into the news, the facts, and the data. Well, look at this, everyone. The collapse in US office tower values is creating a doom loop for the banks. That's exactly right, everyone. What we saw during the first wave of the banking crisis, what caused it is these banks brought a lot of bonds and they lost a lot of money on these bonds when interest rates went up. Well, like I said, do you know what's going to cause the second wave of bank failures? That's right, they're losing billions and billions of dollars on these commercial real estate loans every single day, and landlords are just giving the keys back and walking away. Because people, when I read this article, when I saw the data on what's happening, it was even worse than I thought. So you're definitely going to want to watch till the end. This is going to be one of my most important videos I do. Also, you're definitely going to need to know, which I'll get into later in the video, how to protect yourself against this economic downturn. And also, in case we see a market melt up, is central banks start lowering interest rates to zero and printing money again in order to try to bail out these banks. Now, after this video, if you're wanting to know more and get a step-by-step guide to protect yourself against the economic hurricane that's going to be coming, learn how to build wealth, master the cycles of gold, silver, and Bitcoin to hedge yourself against a deep recession scenario and also a market melt-up scenario, if these central banks lower interest rates to zero again and do crazy money printing like what they did during 2020 and 2021. Again, I'm having a flash sale for the next 48 hours. It's only $179. Most YouTubers charge $400 to $500 for their courses. I wanted to make it affordable price for my loyal subscribers, and once the course is finished during the pre-launch, the price will be doubling. But okay, everybody, let's get into this crazy report. So for months, the most pressing topic of conversation for bankers, whether in Manhattan, London, Stockholm, or Sydney, has been how the collapse in commercial real estate values will spill over into the financial sphere. Bankers' preoccupation with the deeply troubled state of the office market has only intensified as they've watched some New York office towers being offloaded at hefty discounts. So while we're going to focus on the US commercial real estate industry in today's video, this is happening around the world in Europe and in Australia as well. Because listen to this, everyone. Silverstein Properties is selling a 20-story office building on Fifth Avenue for $105 million. That is a $66 million less than the amount Silverstein refinanced the building for in 2020. So that's right, everyone. This 20-story building on Fifth Avenue has collapsed 40% in value. But there's a saying, when you owe the bank $1 million, well, that's your problem. But when you owe the bank $1 billion, well, now that's the bank's problem. And this is what we're going to see with more and more landlords around the world. Alternative asset giant Blackstone has sold 49% stake in One Liberty Plaza at a valuation of $1 billion, a steep discount to the $1.5 billion it carried when Blackstone bought the stake in 2017. So again, everyone, this isn't just one or two office buildings that are selling for huge discounts. It's happening around the country and around the world. Then there was RXR, which defaulted on $240 million loan on its 33-story office tower in Lower Manhattan. The property developer plans to transfer the ownership of the office tower to whoever buys the defaulted debt. But keep on reading, everybody, that's just the tip of the iceberg. But bankers estimate that the values of less desirable office buildings, those that are less well located, require refurbishment, or have lost anchor tenants have dropped by as much as 2/3. Did you hear that, everyone? It's dropped by 2/3. This was known as some of the most safest assets you could buy around the world, but I think this is only going to get worse and it's never going to recover. Why? Well, that's because of remote work. As technology gets better and better, it's going to become more and more common, even though companies are desperate to get workers back into the office. With unemployment so low, a lot of employees have a lot more power to say, no, I want to work at least 2 days from home. And also artificial intelligence. Whether we like it or not, artificial intelligence will come, it will take jobs, and it's most likely going to take a lot of these admin jobs that are done in offices and a lot of white collar jobs. As a result, they fear this commercial property crisis will be even worse than the 2008 financial crisis, as reduced demand for office space collides with soaring interest rates and falling property values. That is a huge statement, everyone, because a lot of the mainstream media and a lot of the banks, they try to tell you, look, there's nothing to worry about. They will never tell you how bad it's really going to get, but they are even now starting to admit that this crisis could be worse than 2008, and it's already started. Because like we talked about, occupancy rates are tumbling. They point out that real estate borrowers have seen their cost of capital double or even triple. As US Federal Reserve has increased interest rates and corporate borrowing spreads have blown out, this surge in borrowing costs has dragged property values down lower. Now, the big difference with commercial real estate and, for example, residential real estate is residential, it's a lot of emotional buying. People buy it for a home, they love their home, they have a lot of memories in them, so they'll do anything they can to keep it. But with commercial real estate, it's all about returns and it's about investment. So if they're no longer going to get a return, they're simply just going to give the property away. At the same time, the average city office occupancy has tumbled as most companies have settled into hybrid work strategy that allows employees to work a portion of their week from home, and this has eroded demand for office space. And this creates a domino effect, everyone. As these office buildings lose their employees, well, then the businesses around that office building lose business as well. And this is the big problem that I'm trying to warn about. So the big problem is that about 1.5 trillion in commercial real estate debt, much of which was written at an interest rate of 2.5%, is expected to come due for payment over the next 3 years. So I don't know about you, everyone, but this sounds very familiar to 2008 with these adjustable rate mortgages. Unlike residential real estate in the US, a lot of these commercial real estate got loans with adjustable rates. And if the Federal Reserve keeps on lifting interest rates, they could see their mortgage rate triple from 2.5% to 7.5%. And again, with commercial real estate, there's no emotion involved. It's all about business. It's all about returns. So if there's not going to be any return, they're simply just going to walk away. But again, that's going to cause major pain for banks. So let's get into how this is going to affect them. So this has fueled intense speculation about which banks are most at risk of suffering big losses because they too have many office loans on their books. The consensus is that smaller US regional banks and some European lenders are most at risk from their heavy exposure to real estate, and smaller US lenders account for close to 70% of the country's commercial real estate loans. Boy, oh boy, everyone, we're going to see another wave of smaller US regional banks go under, and this could cause a domino effect to start affecting the big US major banks. Because we've already seen with Bank of America, for example, they've got $109 trillion in paper losses, and if commercial real estate goes under even more, we're going to see those paper losses completely blow out. Bankers point out that maturing commercial real estate loans will probably be difficult to refinance since most lenders are already tightening lending standards. A rise in defaults will further sour commercial real estate market as distressed sales push property values even lower. That's right, everyone. Something else we've been trying to warn about is the credit crunch that we're already seeing right now. So a lot of these commercial landlords that could get loans, 2 years ago, when they go ahead and go to do the numbers maybe now or next year with the higher mortgage rates, they're no longer going to qualify. Smaller US lenders could easily see their capital wiped out if they're forced to take big losses on their commercial real estate loan books, and this would in turn result in a big credit squeeze for the US economy. Because you know what's going to happen, everyone? Once the banks start to see the commercial real estate is crashing, they're no longer going to want to lend to this industry, and it'll make the situation even worse. But have a look at what else just happened, everyone. So listen to this. Hotel real estate investment trusts say it would likely return 19 properties to lenders. So Ashford Trust also extended debt on other groups of hotels. Properties would have required a pay down of about $255 million. So what we're starting to see, everyone, is kind of like a margin call. A lot of the banks are starting to call up these commercial landlords and say, look, your loan to value ratio is starting to get too extreme. You're going to have to put down a huge down payment or we can no longer lend to you. So Ashford Hospitality Trust Inc. expects to return 19 hotels to lenders in cities, including Las Vegas and Atlanta, declining to pour more cash into the properties, which are part of a $982 million mortgage pool that missed a repayment deadline in June. So that's right, everyone. The big boys with mortgages in the billions and now starting to default on their loans. The Dallas-based Ashford Trust said in a statement Friday, the equity in the properties is already negative based on comparable sales and brokers' opinion of value, according to the statement. At this time, it appears that the most likely outcome will be a consensual transfer of these hotels to the respective lenders, the company said in a statement. So that good old jingle mail is coming back. With high interest rates and falling property values, many lenders are requiring borrowers to pay down part of their debt or provide additional capital for property expenses in exchange for extending a loan that comes due. Through June, hotel values were down 3% from a recent peak, compared with a 16% drop for all commercial property types and a massive 31% plunge for offices. So most of the hotels Ashford Trust expects to return to lenders are located in markets that experience significant headwinds through their post-pandemic recoveries, and a number of these markets are not forecast to reach pre-pandemic top-line levels until 2025 or 2026. But everyone, what nobody's talking about is what if the unthinkable happens? What if inflation doesn't go away? What if interest rates don't go down? Because what the markets are hoping on and they're betting on, and this is a huge, huge risk, is they're betting on that the Federal Reserve is going to start cutting interest rates in 2024. But what if they do the opposite? What if inflation surges again, which is what we're starting to see now, and they keep on hiking in 2024? Well, that will be complete game over. So everyone, I know what you're thinking. Well, okay, what does all this mean for you in simple terms? What this simply means is commercial real estate is crashing and it's not likely to recover anytime soon. A lot of the banks gave out massive loans. Some of the small lenders, up to 70% of their loan book, are to commercial real estate. And if depositors and investors start to see the huge losses on the bank's balance sheet when they do their earnings, well, they're going to pull their money out. And like what happened with Silicon Valley Bank, we're going to see more bank failures. So everyone, how you can protect yourself against this downturn is you want to have your money spread across multiple banks, especially you don't want to go over the $250,000 FDIC limit, even though they don't have enough money to bail out all banks. At least you'll be more protected. And you may want to get out of the financial system altogether by diversifying into physical gold, silver, and also self-custodying Bitcoin, because what we saw during the banking crisis in March is Bitcoin price actually went up. A lot of people were taking their money out of the financial system, they were putting it in Bitcoin and they're self-custodying it, holding it offline. Again, everyone, if you're wanting to learn more on how to do this, you can click the link in the description below for my courses on sale right now. But everyone, what do you think about all of this? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.